What's up, everybody? Welcome back to the High Performance YouTube trading channel. I am Joshua Salvetti, and today I have a very different type of presentation for you, right? It's called How to Fail as a Trader, how to remain inconsistent, and how to lose all of your money in the stock market, right? So basically, I'm going with a different type of culture content today, right? It's called inversion thinking, right? So the way inversion thinking works, right? This is a practice that Charlie Munger, Warren Buffett's business partner over at Berkshire Hathaway, that he truly believes in, right? I've been doing a lot of research and putting a lot of time and study into behavioral science, right? And basically what that is learning how our brain works, how our brain takes mental shortcuts, right? Because we obviously can't process every decision we make, and how those tendencies affect us, especially as a trader, right? So one cool way our brain works, which is kind of contrary to the way the market works, is we spot problems a lot easier, right, than solutions, right? So it's easier for us to understand a problem than it is to find a solution for the problem, right? So inversion thinking is the practice of thinking through problems in reverse, right? Inverting a problem, turning it upside down to see it from a different perspective, right? Inversion is asking how an event could fail and then avoiding those behaviors, right? So let's break it down, how to lose money as a trader. Let's go step one. So step one to how to fail consistently is do not plan, right? Do not identify key levels of interest. Do not identify supply and demand zones. Do not organize your charts, right? And do not understand the market auction, right? Do not see where the buyers and sellers are, right? Step two, do not have patience. So this is a problem I dealt with for probably almost a full year as a trader. That cost me so much money. And guys, the reason I want to make this video is because I've done all these. I have ran through all of these problems, and it ruined me for so long, right? But now I have a great understanding on a lot of them, and I really would like to give back and help you guys not make the same mistakes I did for so long. So step two is no patience. And notice over here, we have a green bar right at 9:30. And this trader rushed right into it because he's seen a green bar, and he did not know he was entering a supply zone because he did not identify his supply and demand zones, right? He just went long because he didn't want to miss the best move, right? He took a trade without his edge present because he did not want to miss the move, right? What do they call it? FOMO, fear of missing out. So no patience. Step number three, no risk management. Okay, so basically what that means is you are holding on to trades that are not making you money because you do not have a predefined stop target, right? And someone that I put this perfectly, right? Carmine Rosado over at Investor Trade, he said basically your stop loss is where your hypothesis is proven wrong, right? So wherever your trade is proven wrong, whatever your game plan was, once price touches the area that proves it wrong, get out, right? So if you're going for a double top, you have supply over at 160, right? Once price rips up to 163 or 162 or 161, get out of the trade, right? So no risk management. You're holding on to trades that are not making you money, right? That stop target is very important. Number four, which has a big influence on number three about that stop target, is position size, right? So one thing I used to struggle with is position size. I would trade my whole account on one trade. I would get seriously emotionally attached by size and ego. I actually think that's a picture of me punching my computer back in 2021. And I would trade with tremendous position size, causing the trade to become emotionally and trade based on fear. So I cover this in one of my courses called Probabilistic Mentality, right? Which is a phenomenal way to trade using a probabilistic mentality. And basically what that is do not trade with your whole position size or with your whole account, because then you need every trade to go well, right? So quick little example, if you have 20 straight good trades, you could even have 100, you could have 100,000 good trades, but if on that 100,001st bad trade you're trading with your whole account, all that good work is wiped out. Now guys, if you have a win ratio, right, and your edge is proven to give you at least 7 out of 10, you need to be ready for those 3 failing trades. You cannot be married to every trade. You cannot trade with your full account. I don't even like trading with half my account. If you have a $1,000 account, trade with around $250. It will change your life. Perfect. Step number 4. So step number 5. You do not log, right? If you want to remain inconsistent and you want to keep failing in the market, do not log and do not analyze your trades and do not track your trading data, right? So basically, do not keep track of your daily strategies and performance and do not journal your trades. So one thing that really helped me change my life as a trader was the day I started, which was last year, right around this time, logging every trade. I got a really great way I like to do it. I don't care how you do it, as long as you do it, right? Learn which setups work for you. Learn what setups are extremely profitable for you and which setups fail for you and are harder for you, right? So personally, the VWAP bounce. Every time price touches VWAP and retraces, that's a hard setup for me, so I stay away from it. Simple as that. You need to log and recreate your trades, right? And I will dump further into what I like to call trading metrics in another lesson, in another video, but that is basically how you log and recreate your winning trades and log your failing trades to learn why you failed, right? And most importantly, calculate your probable outcome. So every time I see a double top in this market, in the right market context, I have a 92% that trade is going to go my way based on how I do it. And the only reason I know that is because I log and recreate my trades, right? It's that simple. My statistics, my convictions, definitely going to be different than yours. So do not just say double top has a 92% conviction rate. I'm just speaking for myself. I'm not a financial advisor, but log your shit. Okay, so next. I love this chart. My charts used to look like this. Step number 6. The failing trader relies strictly on his or her technical analysis, his moving averages, and his indicators, right? I know a lot of you might still be using the RSI, the MACD, the stochastics. Listen, whatever works for you, do it. But if you are not where you want to be as a trader, maybe it's time to do something different. Maybe it's time to get rid of those indicators. Guys, just let them go. Right? They're giving you information based on what the market's doing, right? You are trying to predict instead of react. The indicators got to go, ladies and gentlemen. I am telling you, is a game changer. Get rid of them. If your chart looks like this, you only have so much mental capital, right? Let's bring it back to that behavioral science thing I was telling you about. Your brain needs to constantly take shortcuts, which is why we gravitate towards these indicators, right? Because they're easy. They give us signals, right? This cross happens, go long. I'm telling you, 99% of retail traders use them, and 99% of retail traders fail. So think about that. Think about those numbers. They do not work. Your chart looks like that, you're gonna fail. I promise you. Simpler, the better. Simplicity. Step number 7 to remaining consistently failure in the market is blame the market, blame the banks, blame the market movers for your losing trades and behaviors. Absolutely don't have any accountability if you want to remain inconsistent, and do not blame yourself, right? So basically, put the blame on everybody else and try again tomorrow. Keep you consistently failing. Step number 8, trying to predict the market moves versus reacting to what the market is telling you, right? I always say this in a lot of my videos, ladies and gentlemen, we do not predict the market, we react to it, right? A lot of things that you'll see in my Discord when it comes out January 1st is I will state the levels of interest I'm looking at, and bearish and bullish and balanced situations based on those levels, right? I do not and will not say, hey, I'm expecting the market to rip today based off XYZ, right? There's so many different variables in the market. Any veteran trader knows you cannot predict what the market's going to happen, but you can react to the given information pretty much based on price and vol analysis, right? So trying to predict will definitely keep you a consistent failure. Step number 9, right? My all-time favorite, right? I recommend a book called Trading in the Zone by Mark Douglas. He breaks all of this down, right? It is phenomenal. Definitely a game changer. Step number 9 to remaining consistently failure in the market is do not trade with long-term probable outcomes. Do not gather data to learn probabilities of trading success per setup and expect your edge to work 10 out of 10. So I cover this, like I said, in a course that of mine, a mini course called Probabilistic Mentality. But just for a quick little breakdown, if your edge, right, say you've done your probabilities and you know in the month of November you had an 82% win ratio, which is phenomenal, which means 8 out of 10 you made money, right? So with that information, that still leaves you 2 bad trades per 10. If you cannot get out of a losing trade without getting painfully hurt, without it damaging your account, without it ruining your mentality, you will not be consistently profitable in this market. You won't even do well for a month. Every 10 trades, you're going to have 2 bad, and that's with a phenomenal win ratio. How do you expect to become successful if you cannot be ready for those 2 trades? You need to trade with a probable mentality, right? A probabilistic mentality. A lot of card counters do this. Can you imagine if someone that knew how to count cards and he's playing blackjack expected every hand to go his way? He wouldn't be a successful blackjack gambler, right? So basically, ladies and gentlemen, you need to play the long-term game. Trading is not, I know you got lucky when you first started trading and made 5K in a week, but that is not how you're going to become successful, right? Do not put your favor in luck or in unreasonable chance, right? Learn your probabilities. Learn what you did last month and try to do it again this month and tweak it better, right? And definitely, so what happens when you're expecting every trade to go your way is that you use way too much large position size. You get married to the trade. You have huge amounts of ego invested in the trade because you were brought up to think the harder you work and study the technicals, the better you're going to do as a trader, right? Wrong. Exactly not how it works. I don't care how good you are at analyzing the market, price and volume, fundamentals, technicals, doesn't matter. You're going to have losing trades. And if you're not able to recover from those quickly, you are going to remain a consistent failure for life, right? So step number 9, you guys got to learn to trade with probable outcomes, right? And step number 10, this actually is supposed to say step number 10, make sure you give up after a few tries, right? Complain about all the current market conditions and just, give up once times get hard, right? So trading is a very hard, but very satisfying game, right? And these are ways, if you want to remain a consistent failure, to keep on doing them, right? And hey guys, if you liked this video, make sure you smash the like, subscribe for more content, right? And by any means, do not remain inconsistent, guys. Run through these, write them down, look at them every day, right? Because like I said, your brain can understand a problem way better than it can find a solution. I'm Josh Salvetti. I'll see you in the next video. I'm out.